Right, good evening everyone. Welcome for this sharing session over here. Okay, so for today we'll be focusing on the equity CFD market. Okay, so what we're gonna do is I'm gonna share with you some of the basics in terms of the method that we're approaching in terms of CFD trading. Okay, and then I will take a look into some of the opportunity for the week that you can potentially look out for. Okay, so for the benefit for everyone, okay, we'll go through this the method first, right? So basically, if you have been listening to some of our sharing, you probably came across this method called the EWS. We have been using this pretty much more extensively in the FX market. Okay, but essentially what we do over here is we're just combining the technical chart plus the seasonal statistics to help us in our trading journey and process, right? So we're combining technical analysis plus seasonal analysis to increase our probability to help us to filter out what are some of the opportunities we want to focus on for the week. Okay, so over here, I'll introduce to you guys basically how to look at the technical portion first, right? The Elliott wave perspective. And then what I'll do is I'm going to share with you, okay, some of the seasonal data that we have recently, okay, and show you some live examples of how we can potentially look out for a trade this week, okay? So very quickly, what is Elliott wave? What is technical analysis? Okay, at the end of the day, it's really about pattern recognition, right? So today, the Elliott wave analysis that I'm going to share with you basically just need you to recognize the pattern, okay, and you're able to then start looking at a chart very differently. Right. So there are many ways. You can look at it from price action. You can look at it from indicators. You can look at it from like support and resistance. Okay, but at the end of the day, I want you to know that there's no such thing as 100% sure win. Okay, so each technique has its own weak point as well as advantage as well. Okay, so at the end of the day, you do not want this. Okay, you do not want your chart to be overcomplicated, and we want to keep it simple. Okay, so the idea is that Elliott wave seems to be like very complex for most people, but if today you are able to understand the principle of it, okay, it should be quite straightforward. Okay. So today you just need to really understand and be able to identify what is impulse and what is correction. Okay. So impulse, the idea is market move off in a very fast and very clear and very strong momentum. Okay, and correction is basically just the opposite of it. Okay, so if you take a look at this chart over here, you can see very clearly the red ones are your impulse push, okay, and the blue ones are basically your correction. Okay, so you can see impulse are basically very, very fast and corrections are just very slow in movement. Okay, so when you start able to do this, okay, just to show you a very quick example over here, okay, the left side which I boxed up is basically an impulse, followed by correction, followed by impulse, okay, and followed by correction. Okay, so you can see on the chart basically fast move, clear direction, they're impulses, and slow ones, they are basically corrections. Okay, so once you're able to do that, okay, all you need to do is have the ability to identify these three patterns over here. Okay, first up we have the impulse plus correction. Second, we have two impulses together, and then the third is basically impulse plus crawl. Okay, so show you some example very quickly. Okay, whenever we see a chart that has an impulse and correction, we look for a trade. Okay, because the opportunities are presenting itself. So when you see a push up and then a sideways move, you expect it to go higher. Okay, and vice versa. If the impulse is coming down and you see a correction, you expect the market to continue lower. Okay, every time you see this, you have a setup. In fact, later on when I'm going to share with you an opportunity for the week, okay, there is a potential stop. The chart is actually showing this combination. Okay, the second combination here we have is impulse, which is V-shaped formation. Whenever you see something like that, you just basically avoid it, right? Don't trade it first. Okay, so this is pretty straightforward. The third one here we have is basically an impulse plus crawl. So the idea is initially you start off with a lot of momentum and then it starts to slow down. So it's a sign of reversal. So every time you see a pattern like that, you expect the reversal to come. Okay, so in the first scenario here, you're looking for a sell, and then of course vice versa, opposite. Okay, if it came down very fast and then it starts to slow down, you look for the buy. We have also a stock that is showing this pattern, okay, which I'll show you later on. How we're gonna prepare for that. Okay, so that's why it's important that I quickly walk you through this first, okay, so that you understand, like, from a technical point of view, what are some of the patterns that I will be looking out for. Okay, so these are just some examples, yeah. So that is a very quick one about technical analysis, right? Today we'll just keep it simple. Okay, I just want you to be able to see the application of it. The second portion where we do our analysis, and this is very, very powerful in the equities and the stock market, because the factors that are affecting the stock market is way less compared to like currency and FX, right? So if you're trading FX, there's a lot of things you really need to understand, as well as factor in when you're doing your analysis, because it's currency, okay, and there's so many things that's going to affect the price of a currency, yeah. But if you're looking at US stocks, it's slightly easier because the things that are going to affect the particular stock is not as I would say complex compared to FX, okay. And the idea of seasonality, therefore, would be very, very powerful in the equities market. Okay, of course, in the stock side, you can still use it, okay. But I always advise in the FX side of things, if you use seasonality, you need to add on definitely the technical portion. Okay, but in terms of stocks, you can, right? In fact, we have one strategy that purely rely on seasonal and as well. Okay, that's all. Okay, but today we're going to combine both, right? Because we're looking at CFD. Okay, so seasonal analysis at the end of the day is also a technique to identify patterns, but what we are looking out for is historical statistics, right? Based on price movement, is there a repeatable patterns in the past 10 years that we are able to identify and therefore kind of like take advantage of that pattern itself, okay? So seasonality, the idea is there is no guesswork, okay? Based on pure statistics, it's going to tell us like, do you want to focus on buy? Do you want to focus on sell? When do you look to buy? When do you look to sell? Okay, so give you an example, right? If let's say today we apply this in the currency market, of course, it's the same principle. Now, let's say we look at the dollar itself, and historically based on past 10 years, of course, we can go like 5 years, 10 years, 15 years, 20 years. Okay? But for trading perspective, to me, I think 10 years is more than enough. Okay, so for example, okay, this date is already passed, but I just want to show you what is seasonality. Okay, so if we know right now for the past 10 years that US dollar between 4th Sep to 17th Sep tends to fall 8 times out of the 10, okay, we can actually put this into a probability and say that for the past 10 years, there's an 80% chance that dollar would actually drop between 4th Sep to 17th Sep, right? That's the stats, right? It's not like a guesswork or anything. It's you go back and take a look at for the past 10 years, this is exactly what happened. Right? So put it into today's context, right? If you're gonna look at the dollar index from 4th to 17th Sep this year, of course, then you have a higher chance if you focus on the downside, because past 10 years, 8 years actually dropped. Okay, so the direction becomes very clear, and of course, the time, or say the date where you want to focus on the sell is also very clear. Right. So for us in stock market, what we do is, okay, we use seasonal analysis to help us filter like this week. Okay, what stock should we be focusing on? Okay, and we look into then the technical portion of things to decide how we want to trade, right? When we execute, where we put our stops, and where is our potential target as well. Okay, so this is a very quick understanding about the EWS method, and basically combining Elliott wave, which is a technical analysis plus seasonality. Okay. So let me bring you over to, I've actually kind of like extracted the data for today's sharing over here. Okay, I just wanted to maybe highlight a couple of it over here so that we can really talk about it, right? So we highlighted 4 of this. okay, Netflix as well as AT&T. Okay, so let's talk about Apple first, right? So if you take a look at this highlighted one on Apple, okay, you can see that for the past 10 years, okay, that's a win ratio of 80%, which means that past 10 years, 8 years actually drop, and 2 years, 8 years rally, okay, and that's 2 years that drop. Okay, so this is based on this current week. Okay, so if today, this week here, you're looking to trade, right, then immediately you know that, oh, Apple, in this week here, there's a good 80% probability it's probably going to rally, right? And therefore, if we're going to focus on trading Apple this week, definitely the direction is upside, okay? Similarly, over here, you can see AMT, okay, American Tower Corporation. There's a 90% chance that it will rally based on the past 10 years historical data. Okay, so same thing, if today you're looking at AMT this week, you're looking to trade it, you would rather focus on the upside. Okay, similarly here we have Netflix, right? Netflix has an 80% chance of rallying this week as well. And of course, AT&T over here has a 90% chance of rallying this week. Okay, so I've actually highlighted this 4, and I just want you to I want to bring you to the chart and, you know, just take a look at it. Okay, so seasonal on the stock side is rather straightforward, right? From there, we know which stock we want to focus on, which direction to focus on, and of course, the date, right? And the date is basically this week. Right. So with that, okay, I'll maybe spend a little bit more time on Netflix, because I think Netflix is giving us the clearest setup in terms of the combination of seasonal plus technical analysis. Okay, so seasonal here has already tell us we're looking at upside within the week, right, for the stocks. Okay, so direction is more or less there. The directional bias has been established. And the next thing over here is we're going to look at the technical chart to find if, okay, the chart is also telling us the same thing, okay, that we are looking for a buy. Okay, so if you take a look at this, of course, you can play around with multiple time frames like 1 hour, 4 hour. Okay, I don't think you want to go to daily, because then you know, your horizon will be very, very different. If today you're looking at trading the CFD, of course, we're looking at shorter term, right? Okay, so for me, maybe, you know, intraday, somewhere around 1 hour and 30 minutes time frame. Okay, and we're looking at it from a week to week basis. Okay, so basically the idea is you go in within the week, you look to also get out within the week. Okay, so from a 1 hour time frame, right? We start off with 1 hour time frame perspective first. Okay, you do see that we have this very clear push to the upside, right? Which is an impulse push. Okay, very, very strong momentum to the upside. And right now we are currently doing kind of like a corrective move, at least from a forward perspective. Okay, so again, this is a pattern from a technical chart to tell us that there's a high chance that this can continue higher, right? Because you get an impulse followed by a correction, which we talked about just now. Every time we see a pattern like that, there's a good chance it will continue higher. All right, so that's on the 1 hour scale, right? Of course, we can start to draw in a little bit of our technical analysis. You know, you can put in a little bit of trend line over here to kind of help you identify, oh, okay, this is the pattern that looks like that. What you can also do, you can of course add in some lines, horizontal ray lines, to give you that kind of like support and resistance. Very, very simple analysis will do. Okay, so over here on the 1 hour scale, I have basically identified, okay, that's the low, okay, that's the high over here as of now, and then we are trading somewhere in between. Okay, now if I start to go down to the 30-minute time frame, okay, I can even start to see, oh, okay, can you guys identify this is that impulse push, and then seems like this is doing its correction, right? Okay, so what you see over here is the orange dotted line. Okay, that's the pre-market open price, which means that last week the market closed here, but as of today, pre-market open, it's somewhere still here. Okay, which means the market seems to be coming down. Okay, so what you want to then know, of course, you know, I don't take too much of a concern of whether the CFD is going to get up or get down. Okay, but for me, I'm looking at overall pattern. Right. So this pattern here on the 30-minute is pretty clear, right? We get an impulse push, and looking at this, seems like this can form into a corrective pattern. Okay, so we have an impulse plus correction as well, a smaller piece over here, and it also suggests upside. Okay, so how we can then start to get involved in, let's say, Netflix, okay, because seasonal, we know it's upside, we know this week, that's the window of period for us to trade to the upside. From a technical point of view, we have the 1 hour time frame giving us the setup as well. And then of course, in terms of like 30 minutes, we do have a smaller pattern as well that telling us that you can look for upside. Okay, so what's next is basically to identify the execution. Okay, how you want to execute this trade. And I always say generally there are just two big categories of method that you can look to get involved in the trade. Either you look at a breakout, okay, or you look at a retracement. Okay, so a breakout, both of course, either of it has its own advantage and disadvantage. Okay, but if we talk about breakout over here, maybe I'll kind of like take this line away a little bit. Okay, we kind of focus on the smaller pattern first, right? Now let's say this is the pattern that is developing, right? Something like that. Okay, so if today we're looking at a breakout of this impulse plus correction, okay, what I would then easily reference to is where is that obvious high? Okay, maybe I'll just take it as over here. Okay, so as price starts to break above this white horizontal line, which is somewhere around 596, right? $596. Then I'll look to get involved in the trade because that suggests that this is breaking above it, and there's a good chance it will continue higher, right? That's one way to look for entry. Okay, and then of course, if I'm gonna put an entry there, then my next question is like, where would I put my stop? Okay, then for me, very simple. You can just reference to like the significant low. Right now is this. Okay, so entry is here, the stop is here. That give you kind of like a 2%, right? Stops. Maybe target here you can put about like 3%. Okay, so that's how you can look out for it for a breakout. Okay, pretty straightforward. Yeah. Now, alternatively, what you can consider, of course, is kind of like a retracement trade. Okay, so some of you perhaps are very familiar with like Fibonacci retracement as well. Okay, as of now, you can see we have tested that 50% dip. Okay, but perhaps today this might come back down a little bit more towards 61 before that bounce. Okay, so in terms of a retracement trade, then most of the time you'll be looking out for like 50%, 61.8 Fibonacci retracement. Okay, for your zone of entry to take a trade. Okay. So if you're someone who is more inclined to like maybe retracement setup, okay, then where you're gonna look to enter perhaps somewhere around 61.8 Fibonacci, that will put you around like $580. Okay, where will you put your stop loss? I would then suggest, if you're looking for retracement, perhaps your stop loss will be at the previous low over here. Okay, and that will kind of put your stop here, similar, about 2%. Okay, and you're potentially targeting up here as well, which give you up to maybe about 6% profit, right? 6% upside. Okay, so now there's no like which one is better, right? At the end of the day, you need to go and figure out like which kind of execution method are you more inclined or comfortable with. Okay, so that's how you can look up for it. I mean, you realize that it doesn't need to be very, very complex. Okay, so this is in a nutshell, yeah, how I would approach trading. I mean, I'm not someone who is very active in short-term trading the stock market. Okay, for me, I'm looking more of like medium-term, purely seasonal trades in the stock plus long-term investment. And then whenever I'm looking at like shorter-term trading opportunities, my primary focus is still very much on FX, right? But this method here, you can still take it from FX and then of course also duplicate it into the stock market, because technical patterns tends to repeat itself over and over again. Okay, seasonality aspect of this way of doing things in terms of seasonality is very, very apt for equities. Okay, because that's how it started actually. Seasonality actually started off in the equities anyway. Okay, so yeah, I mean Netflix, if those of you are keen, I think that's a very good opportunity that you can look up for a potential buy, okay, to the upside. Okay, again, depending on your execution, you probably need to figure out, right, what's your primary strategy. There are just so many ways. I mean, if you're familiar with harmonic patterns, right, also a technical setup, okay, this is a potential bad developing as well, right? So Okay, I'm not sure how many of you are familiar with like, harmonic patterns, but this is a potential bet that can be formed as well, going forward. Okay, of course, it depends on how prices are going to develop from here as well. Okay, so I mean, you do not need to use like Elliott wave, the patterns that we talk about today to execute. But I feel that for stocks, okay, you do not want to kind of like ignore seasonality, okay, because that is based on pure stats, right? And pure stats tells you that this week, if you're looking at Netflix, there's a higher chance of upside. Okay? So naturally, I would suggest you would rather focus on the buy side of things. Okay, and in terms of like which level exactly you're gonna get involved, how you're gonna put your stops and things like that, then there are many variations. Okay, in terms of like technical analysis. Okay, so this is a bad pattern here as well, which means that if you're looking to enter based on a harmonic pattern, this is your entry, and then of course your stops will be perhaps somewhere below here as well. Okay, and you're looking for an upside. Okay, so yeah, I mean most of this are all showing sign of upside. Yeah. Okay. Now sometimes you will come across like, for example, okay, maybe I'll see if AMT is a better example. Okay, so sometimes you might come across like AMT, right? So why I have this for here, because I really want to show you the variations of things. Okay, so all of them, the seasonality is telling us upside. Okay, yes, you can just rely on seasonality to go and execute your trade, but if you're looking at very short term, I wouldn't suggest you to do that, because short term price might move very chaotically, right? So I would always suggest, if you're looking at short-term trading, you probably want to add on another layer of analysis, and that's technical. Okay, so if you take a look at AMT, right, while seasonal is upside, the technical here is telling us it's down, right? Can you see the impulse push is very obvious, right? It's coming down very strong. So you get this push, you get a sideways push, you get an impulse, you get a correction, you get another impulse push. Okay, so AMT over here, you can see price is coming down pretty much as an impulse, and there's no reason for you to go and buy it. Okay, because based on technical patterns that we talked about just now, this is not a buy setup. Okay, so when why I combine this two, why do I combine seasonal and technical Elliott wave? Okay, is to really increase my probability. Okay, so in cases like this, AMT, right? Of course, then I will probably not be paying too much attention for it. Okay, while seasonality has already helped me to filter and say that this way you can look at it, but from a technical point of view, it's not going up. Okay, there's no setup that I can get involved in. Therefore, I will not trade AMT. Okay, it's just that simple, yeah. I mean, if you take a look at like even higher time frame, there's no reason why you want to buy AMT right now. Okay, it's coming down. Okay, so that's a very good example to highlight. Okay, another one here that I want to bring your attention to is AT&T. Okay, so same thing, AT&T has a seasonality of the upside. Okay, now from a higher time frame perspective, right? Can you see on the 4-hour scale? Okay, we do kind of have this pattern where price from this high came down pretty impulsively, and then it starts to crawl, right? It came down, but start to slow down a lot. Okay, and this is what we call the crawl pattern, yeah? Okay. So this one here again suggests that there's a good chance that we will see a reversal soon. Okay, because this is lacking momentum, right? So upside as well. Okay, but this is on a higher time frame, right? It's on a 4-hour scale. But if today we want to trade like shorter term, on the 30-minute time frame, there is no sign of upside yet, right? But what we see is more like this is the push down, and then this looks more like a flat, a correction. Okay, so we get an impulse and you get a correction. This suggests more downside. Okay, so sometimes when you look at the technical chart, you might get what I say conflicting signals. Okay, so one time frame is telling you upside, the other time frame is telling you no, it's not upside. Okay, and then you have the seasonality telling you upside. Okay, so as a trader, how I usually kind of like approach this kind of situation is I follow, if today I'm short-term trading, I'm going to follow the lower time frame. Okay, so if the lower time frame is not ready to go up, right, like this case here is telling us the probability is due to the downside, then I'm not going to be in a rush to go and buy in. Okay, but I know that on a 4-hour scale, right, on a higher time frame, it's more or less showing sign that a reversal might be coming. Okay, so I will pay attention to this, but I'm not going to execute it for now because there's no reason to get involved now. Okay. But what I would then look out for is, okay, if this is going to be my previous significant low, perhaps, right, when price come down over here and it starts to form kind of rejection and we see kind of a flat pattern over here, and therefore we have the impulse correction pattern, then this would be a very solid trade to take it to the upside. Okay, so that's how I approach when, you know, I came across a situation like that, where seasonality tells us a clear direction, but the technical, depending on the time frame, it might tell you a different story. Okay, so AT&T is a good example to cover, you know, something like that for you guys to be aware of. Okay, and last one over here is Apple. Okay, so Apple seasonality is upside. Okay, from a 30-minute time frame, I think you can see this as an impulse down and then a V-shaped reversal as well. Okay, so when we see something like that, V-shape, again, it's not the best time to get involved in. Okay, of course, right now you look at the pre-market open is down here, which means that market is coming down. Okay, and likely this can then form into what we know as a correction as well. And if that's the case, then we have a very nice impulse correction, and then we can take this to the upside. Okay, so when I'm faced with this again, you know how I'm going to deal with it. I'm going to give it time. Maybe I'm not going to execute Apple today. Okay, perhaps tomorrow US session will be a little bit better. Okay, that means you let today play it out and see if this develops into a flat, okay, into a correction, and then if yes, tomorrow might be the opportunity to get involved in Apple on the upside. Okay, and of course on the higher time frame over here, you can see as well, we do have patterns playing out, right? So this is like what we call the crawl. We have this push down, but we then get a V shape, right? A mini V shape here. Okay. So perhaps from here, if this forms kind of a correction, then we can take this back up. All right. So yeah, I mean, as of today, okay, based on what we see right now, okay, Netflix will be the clearest opportunity that you can look to get involved in if you're looking at like short-term stock CFDs. Okay, Apple, perhaps you need to wait off until maybe tomorrow, even Wednesday. Okay, AMT is an example where I just suggest, you know, those are things that you do not want to touch for now. And AT&T is probably, you need to wait until maybe closer towards the end of the week, right? Because for that pattern that we're looking out for to develop, it needs time. All right. So yeah, that's a very quick, and I hope it's concise, and yet simple enough for you to really understand in terms of CFD trading. Okay, of course there are many strategies out there. Okay, this is an approach that I personally use. Okay, and that's the part where just like to share with you so that you can consider something like that if it aligns with, you know, your style, okay, and your profile as a trader. Okay? Of course there are many ways to trade the market, okay, but this is just one of them. Yeah, so yeah, I hope today's sharing session over here does give you some different insights. Okay, if you're looking at the stock market, yeah, you need to of course understand it, right, in terms of CFDs, what are the leverage, what are the margin required, and things like that. I mean, you can easily find all this information. Okay, so great. Okay, I hope today's session helps. Okay, let's see if you guys have like any questions that you want to clarify. Okay, if not, then great. Okay, we'll see you guys next time. Yeah, all the best to your trading. Okay, and I'll see you guys again. Bye bye.